Hi there, folks. Welcome to another episode of the Chaikin Minute. I'm David Shulin. Today on the Chaikin Minute, we're going to discuss one of our preset screens. We've discussed some other preset screens in previous videos. Remember, the screener is a tremendous way to find ideas because you can pick and choose exactly what criteria you're looking for in your list of stocks or ETFs, whichever you're screening for. Now, there is a lot of criteria, of course, in the screener. If you're just getting started, you may look at this and say, I'm not really sure where to go. Well, that's why we've created preset screens. These preset screens can be used as they are out of the box. I certainly do quite often, and I also modify them from time to time as well. So today we're going to talk about our bearish, our classic bear, small and mid cap screen. Looking for bears, either stocks to avoid, stocks to remove from your portfolio, or maybe you're looking for opportunities to short something, to place some sort of bearish options trade, right? So, how do we access the preset screens? Well, here in our screener, of course, we find preset screens under the folder icon, manage save screens, and we go to preset screens. We are going to go to classic bear, small, mid cap, give it a click. When we click that, it's going to fill in the criteria for us. Let's discuss this criteria a little bit right now. Now, this screen is looking for small and mid cap stocks. That are more likely to underperform moving forward. So the starting universe is the Russell 3000. We often use the Russell 3000 for our starting universe because it's broad, right? But in this case, we certainly are looking at smaller stocks. That's sort of the premise of this screen. We are looking for bearish and very bearish power gauge rated stocks. This defaults to bullish and very bullish. Typically, most of the time we're screening for outperformers, bullish stocks, but we're not doing that here. We're looking for bears. So bearish and very bearish. The price level is listed as below a falling long-term trend line. So we want to see the stock price not only be below a long-term trend line, but have that long-term trend line be falling, right? This is something in a clear downtrend that we're looking for, right? Other really important indicators that we're always looking at when we look at our stocks is our money flow and relative strength, right? Money flow telling us whether or not the large market moving institutions are likely accumulating or distributing this stock. We're looking for stocks that are being distributed by the large institutions, that they're selling off. This is a classic bear screen, something that's been bearish and will likely continue to be bearish. So we're looking for money flow with a 6-month low persistency. Of course, the same thing for relative strength versus the SPY. We talk about relative strength versus the SPY all the time. Along with the power gauge rating, it makes up the dynamic duo of Chaikin Analytics, the Batman and Robin, right? The two most important indicators. So we are looking for stocks that are clearly underperforming the market and have been underperforming if we are considering a bearish trade, right? If we are considering something to short, etc. Now we've put a minimum price of $5 in here as a default. Anything below $5 might be a little small to be shorting, or certainly to look for an available option for that stock, as stocks with prices that low, the strike prices are probably pretty wide. If they even exist, probably won't trade many options there. And obviously market cap, right? We're looking for small and mid caps. That's the point of this. So we can do small and mid cap, and we click get results. We immediately get 53 results. 53 results. The truth of the matter is that the average stock has not been doing well. The market has continued to move higher, but fewer and fewer stocks are participating. So having 53 small and mid cap classic bears is not too surprising. However, I will add, this is a large number of stocks to be looking through. You may say, okay, I like this. 53 is maybe too many stocks for me to be looking through for a put opportunity or some other bearish strategy? Sure. Well, then we can modify this further. One way to do that might be price level 2. If we're doing something bearish, we might want to look for something that is overbought, right? If we enter our stocks when they're oversold, we would enter a bearish trade, or we would short something, which is in and of itself an exit of something you don't own. We would do that when we're overbought. Let's see what happens if we click that and click update results. Bam, we're down to 9. So this didn't help us with the quality, right? Or the opposite of that. This didn't help us with the quality of these stocks for what we're looking to accomplish. What it did by adding overbought was help us with a little bit of tactical timing. So maybe these 9 are a good place to look for those opportunities. If you are instead trying to build a watch list, okay, maybe 5 is too low. Maybe we're looking for $10 and higher. That knocked us down to 44. Okay, what about beta? Maybe we're looking for something with a little more volatility, perhaps. Okay, 23. Maybe that's a little bit more of a usable number for you. What about above 2? Very volatile relative to the S&P 500. 7. See the ways we could modify this? If you're not familiar with beta, it is a measure of volatility in comparison to the S&P 500. So it's not just a volatility measurement. It's saying, okay, the S&P 500 moves this much. That a stock that moves on average the same as the S&P 500 has a beta of 1.0, right? Anything with a beta below 1 moves less on average than the S&P 500. Maybe your utility stocks, for example, right? Stocks that don't move a whole lot. Not a ton of growth potential there, of course. Stocks that have a beta of 2 or higher are considered very high beta. These are stocks that move on average double that of the S&P 500. Obviously, the index as a whole would likely move less than an individual stock, right? So stocks with a beta between 1 and 2, stocks that move a little bit, but not extremely high. You can use this how you see fit. You might be looking for more or less volatility, depending on what your strategy is. But yeah, this is how we can use and how the classic bear, small, and mid cap screen works. And remember, you can click view in workspace, bring these right over to the workspace and read the charts very quickly, go back to the screener and do it all again. We hope you've enjoyed today's episode of the Chaikin Minute. We'll see you again next week.